Welcome back, fellow investors, to another stock analysis video. Now, my name is Lee, and I thought today I'd go over some more travel stocks that have been hammered within the stock markets due to the current pandemic that we're all kind of dealing with. Now, I was thinking in today's video that I would go over a couple of stocks, but after doing some research on just one business alone, which took me about 2 to 3 hours to do some research, to understand it, to write it up, and all that type of stuff, it's going to be quite content dense. So what I'm planning to do is just to do one today, and maybe I'll do a couple more over a series of videos. If you guys would rather me, condense all of it in one video, just let me know in a comment below. But otherwise today, I'm covering one of the most dominant travel services or online travel agencies in both Australia and New Zealand. Now, this stock has recently been in the news for its capital raising, which, it's not surprising. There's a few stocks that have been in the news for capital raising in the past couple of weeks. But this one in particular has halted trades to ensure that it could secure the bag, secure the big bucks, to make sure that it could stay afloat for the rest of 2020. I'm talking about none other than Webjet. Now, I'm gonna be honest, I've had a few questions about this stock, and people have written in, people have asked me in person, over social media, what are my thoughts about Webjet? The share price has absolutely just been smashed, and is it now a buying opportunity during this time when it's looking to raise capital? And what are the implications behind such a big capital raising like this? And what's its recovery process during and after the pandemic? Now, with all these questions in mind, I actually don't know a damn thing about how Webjet operates apart from the fact that it's an online travel agency. OTA, get used to that. You'll see that a lot in the content coming up. And so of course I had to do a bit of digging, and no better place to look than my favorite #1 source for stock news and information. Guys, relax, of course I'm kidding. I went to the annual report to look at the overall operations, and generally the chairman or the CEO in those annual reports do give a very good summary of the operations and a good summary of the numbers also in the annual report. Now, before I go on with the video, if you could please hit the like button, that'd be greatly appreciated. It does take a lot of time to do the research, to write this out, to film it, to totally understand it, and then to condense it into a 5 to 10 minute video for you guys. So if you could do that, that'd be greatly appreciated. Let's go on to the business model. So it seems like the company has two clear business models in its business to business in Webjet, which basically provides accommodations to wholesale travel industry, and its business to consumer in the travel sector, which we just looked at in Webjet, that provides flights, accommodations, and car rentals to consumers like me and you. Which, to think of it, I remember seeing all these Webjet ads when I was a lot younger, and I don't know if you guys are old enough or remember these ads, but this is definitely one of them that stuck in my head at the time.
All available airline choices to easily compare and book in no time. Webjet.com.au.
So now we kind of understand their main businesses, let's have a look at their operations overview. Their first metric is total transactional value. And this is common for travel companies and is used to indicate how much business they are transacting, which might indicate a couple of things. We could draw that because the transactions have gone up, that there are more users, or that because the TTV has gone up, revenue naturally does so accordingly, assuming the commission you make per sale is the same. In the case of Webjet, there seems to be a correlation because we can see their revenue go up by 26%, which is close to their 27% up in their TTV. This is a good sign of growth, and it seems like 10% of their TTV forms part of their revenue, which is done so with relatively healthy profit margin of 33.6%. Overall though, their net profits are at 60 million with their earnings per share of 47 cents. By the way though, that's definitely not going to be the case for 2020, I can tell you that, and we'll touch on that later on. So the overview is nice, but I always want to see which portion of the company makes what and the reason the company has put forth for such cases. So looking at Webjet's performance, it seems like it's putting the whole of Webjet on its back and carrying them in transactions and revenue, forming about 50% of the company's entire revenue and about 56% of their TTV. By the way, this is also very impressive for a brand that's only started 6 years ago. To be able to get $67 million EBITDA is incredible. So just to describe briefly how Webjet works, it basically acts as a middleman between hotels with empty rooms that need fulfilling and interacts with its clients, which are like travel agencies, which includes wholesalers, retail agents, online travel agents, OTA again, like I said, it's going to be very common, and tour operators. So basically it's a drop shipper of hotel rooms. Webjet has been rather successful at this because they've made acquisitions throughout the year of other hotel providers. And with those acquisitions come partnerships and connections in those regions that the providers are domiciled in. Most of their contracted hotels are from their acquisitions because only 30,000 of their 350,000 hotels is contracted directly through WebBeds, which leads the other 320,000 hotels to be from their other providers that they've acquired. So these purchases of the competing brands are so important in establishing market dominance, which they have done so by being the second largest provider. So now understanding how that slightly works, my next question would be, which region is actually the most profitable? Based on the annual report, it seems like Dubai, where its space is generating the greatest amount of revenue. Now we know Dubai to be a big business hub, kind of like Singapore. And here we can see this is where also WebBeds have a great amount of contracted hotels and forms the largest part of their revenue. Now, given the heavy concentration in Dubai, should Dubeezy be hit by, I don't know, some kind of pandemic or whatever event, that's gonna be a massive hit to WebBeds revenue. Okay, so leaving it at that, we now understand enough of WebBeds. It seems like the rest of the revenue comes from Webjet and Online Republic at $72.5 million. Now, Online Republic is basically just another service of like car rentals and whatnot, so it's not too much different from Webjet. Now, although it seems good because it's a healthy number in terms of the revenue, it is a weakening market for Webjet, and honestly, I don't know anybody that still uses Webjet. The other issue in the space is that people are expecting cheaper flights. Now, I don't know many people who are willing to pay more on the flight at the cost and sacrifice of using that money for the experience that they might have in the destination that they're going to. Like, it just makes no sense, and nobody's doing that nowadays. And it's for this reason that we see low-cost airlines like Jetstar winning the game. And if you refer to my video regarding Qantas, it's one of Qantas's biggest revenue generators. In that video, I also mentioned that most travel is done domestically. And when there's domestic travel, most bookings are done directly through the airline or through sites such as Skyscanner and Airbnb. So with the margins being squeezed into space and other competitors coming in, it's hard to see Webjet's OTA continuing to grow in the future. All right guys, before I go into the capital raising, it'd be great if you give me a like in this video if you've learned something along the way and this video has provided you with some form of value so far, even if it's some entertainment. Back to it. So now with the whole Roni virus, obviously it needs money to stay afloat. So the company requested a capital raising and had a trading halt to try to figure this damn thing out. For Webjet, it's been able to scramble together and raise more than $275 million in capital, with the new share price being purchased at $1.70, which is a massive discount off its current trading price. But during these times, these institutions are taking a big risk and they want to be compensating accordingly for that risk. Now, whilst I think it's good to keep the company safe for the remainder of 2020, I question whether it can sustain its dividends. It'll most likely slash the dividends because issuing more shares and maintaining dividends would be pushing a boulder up a hill and would create some more money leaks now that they have to pay out more shareholders. I also don't foresee their shares going all the way up to all-time highs for years and years and years to come. Because more shares have been issued in the near future, what we might have is actually too much supply of the shares and not enough demand as people look to sell out, especially the short traders who've just come in when Webjet has hit its bottom and looking to make quick profits along the way. So although some might look at this and realize, oh wow, they actually got the money that they wanted and actually more, it might show that there's institutional intrigue in the company. But when I look at it, I see mismanagement in terms of having massive cash reserves on the back end and instead opting to pay that out to shareholders. And obviously with any capital raising, this is going to dilute the amount of shares out there in the market space, and the value of the shares are going to decrease. You might see it increase slightly in value, but do not take that as a direct increase of the value of the company itself. And so my overall thoughts are, I think the business will do well if it continues to expand in the WebBed space. It'll do very well. With a share dilution, it's hard for me to buy in, but we can see that with good businesses such as Qantas, Cochlear, and now Webjet securing debt or capital, their shares seem to be rallying up, which shows that there's some demand for a good business. Then there is supply for the stock. However, I'm quite skeptical for their growth in the OTA space because I personally don't use the service. So in a space where margins are getting slashed because people are expecting cheaper flights, it'll become much more difficult for Webjet to compete and grow its revenue. But it has deferred dividends already, and I believe it might not even get paid out for the rest of the year. So those of you who have stuck around to the end of the video, you might want to check a company called bookingsholdings.com. I think that's it. They basically own bookings.com. Now, that's an American company, and they have $1 billion of cash in the bank. And have they asked for a capital raise? Absolutely not, because they don't need it and they were managed very, very, very well. Now, this is the importance sometimes of not giving out your money in the form of dividends and holding it back in the company for these unforeseen events. When things are good, people don't really care about that, and shareholders want an increase on their return, which we give out in dividends. When things are very, very bad and dire, we need that cash immediately as a company to stay afloat. So if you're looking to get into the shares, I personally wouldn't long term, but it could be a great swing trade in the near future. And that's it for me, guys. I'll catch you guys next time. Let me know in the comments which company you guys want me to look at. Check out my video over there, subscribe over there, hit the like down below and the bell as well. I'll catch you guys next time. Cheers.